Hey, what's up guys? Houston here. Now, many of you have been putting in the comments that you haven't been able to get approved for an installment loan, okay? And here's the reason why, okay? Because when I say a guaranteed approval, there's certain things you have to understand. One of the reasons is not enough income, okay, with some of these installment loans. All right. So I made a video when I was in Vegas and I was telling you that with certain lenders, the income threshold is at least 45,000 or higher. Okay. So with certain lenders and stuff, if you don't have that income on the application or whatever, and they see that you don't make enough income, they will deny you. All right. So that's number one. Number two, one of the things about it is that when it comes to the information on the application, okay, so your address and your name and stuff that you put on that application, when these lenders, when they say that we're not going to do a credit check, what they're doing, they're using third-party verifiers, okay, third-party credit bureaus to determine if they're going to qualify you, okay? And so remember I told you about like LexisNexis, Clarity, DataX, Factor Trust, okay? So those type of third-party companies they're using to make sure that the information on the application, because a lot of people think, well, my credit is just too bad. Many times, again, it's not usually about the credit with a lot of lenders because they look at other factors in terms of qualifying you. But one of the bigger factors is the information on the application matching up with the information with the credit bureaus, okay? Now, here's the thing about it. I want to readdress this income thing. If you have a spouse in the household that has an income, then you need to put that income on the application as well, okay? If you're receiving rent and you're on disability or you're on welfare, then that's income that you can include in the application. If you are retired, okay, and you have a pension, but you're also receiving other income, you're working a side hustle, stuff like that, you need to include that income. Okay, what that does, that pushes down your DTI, your debt to income ratio. Okay, so that's the reason why many people may not qualify. Speaking of debt to income ratio, that's another issue that comes up. That's the third issue that comes up. Your debt to income ratio depending on the lender. Now, if you're going with banks versus the credit unions, and I'm going to tell you some of the best lenders you should go to, but when you go to the banks versus the credit unions or whatever, because their DTI is usually threshold between 50-55%. All right. Now, with some lenders, credit unions that may be using like Upstart platform to qualify you, then that DTI may be much higher. Okay. And I'll tell you about some of those lenders as well. But that's the thing about it. With many of these lenders, you may have too high of a DTI when it comes to getting an installment loan. All right. Now, here's another thing that you definitely should understand in reference to the state that you're in, okay? That lender may not service that state, all right? So that's the reason why it becomes so challenging for you to get approved for a loan, all right? That being said, let's talk about some of these lenders so you are aware of them. All right. So the first one we're going to talk about is Avant. Now, many of you heard me talk about Avant, but here's the thing about it. Like I said, the credit score, granted being a 550. All right. The thing about it with Avant, the minimum income you have to have is at least $1,200 a month after taxes. Okay, so if you don't have that $1,200 a month after taxes or more, then that's why you may have the challenge. Okay, and their loans go from $2,000 up to $3,500. All right. Then you have another lender, which is Achieve. Okay. Now, again, with Avant as well as Achieve, their DTI goes up to 70%. So you have more flexibility, and that including the rent and mortgage, right? So here's the thing about it with Achieve, and this is very important. Granted, they will work with people with at least a 620 credit score, all right? However, your credit file has to be at least 3 years old with 2 trade lines on the file. Now, here's the thing about it. When people are restarting or they have bad credit and they done had their credit clean and all of their accounts have been removed, and you add on new accounts. Now you have a brand new file, or when you add new accounts to your file, you have a brand new file. So how do you age that file? Well, there's a couple ways you can do it. And with these here lenders, they also accept it, right? So when you have like rental payments, all right, like using like Rent Reporter or something like that, they will age the file. So depending on how you're paying your rent and stuff like that, they go back, and the opening date that they put on the credit file actually ages your credit file. All right, so that's number one. Number two, in reference to aging the credit file, is using an authorized user. Now, many of you have heard me tell you that all authorized users are not the same, okay? And if you need help with authorized users, type authorized user in the description, and I'll send you over a link to schedule one-on-one to talk about authorized users, which is the best authorized users, and see if we have any in-house authorized users we can offer you. All right. Number three is that Identity IQ. They have this utility billing thing that will backdate your credit file as well. A lot of people are not even aware of this one, but it actually ages your credit file, like when you add utility bills onto your credit file. All right. So that's how you actually age the credit file. Let's talk more about these here loans. All right. Now, you have platforms like Green Dollar Loan, all right? So with Green Dollar Loan, it is a platform. Their interest rates are 5.55 up to 35.55, right? Now, here's the thing about it. By it being a platform, they do work with tribal lenders. Now, one of the things about it, many of you all constantly hear me say that with tribal lenders, because they don't have to go through all that red tape that banks and credit unions make it much easier. Now, usually the minimum income you need to have for this type of lender is at least $1,000 after taxes, okay? Now, you have another lender, which is Checking to Go. Okay, so with Checking to Go, they may not offer loans in all 50 states. However, they offer installment loans up to $5,000. Okay, now, in terms of the minimum income, usually minimum income with them is about $800 after taxes. All right. So that income is much lower. At the same time, they offer loans up to $5,000. Okay. Now you have another one, which is Opportune. Now, Opportune loans, you hear me talk about them a lot. They go up to $10,000. Right. And so you don't even need a social with them. But the minimum income, again, with them, if you needing it, is the minimum income with them is at least $500 a month after taxes. Okay, so they offer a very flexible program because it's a community development financial institute. So they make it much easier for you to qualify. Okay, there's another lender out there called People for the People's Trust. Okay. It's called For the People's Trust, okay? And there's a credit union, and then there's a separate platform lender, all right? And so with the separate platform lender, the People's Trust, For the People's Trust, what it is that it's a CDFI, just like Opportune, okay? And when you have challenging credit, you're in the community and stuff, they make it easier for you to qualify for loans as well. All right. So that's one lender you have to address as well. Now, here's another way for you to actually get a free interest loan. And this is something I continue to tell you guys. If you're working a job, you work in a W-2 job, go to your HR. okay? And you request this form called a W-4 form. It's a tax-exempt form from the IRS, okay? So that means that federal income taxes will stop. They will stop taking federal income taxes out of your check, okay? That way you can bring home a bigger paycheck and you may not have to take out these high interest rate loans. Now, I always tell people do this for at least 3 to 4 months to help yourself get caught up on bills and things of that nature. But filing that W-4 form, that's the easiest and fastest interest-free loan that anyone can get that's working a job. All right. So that's very important. Now, another helpful place, if you need help with your utilities and stuff like that, then you want to go to findhelp.org. Okay. So with findhelp.org, what they do, they offer help for us paying rent, utilities, putting food on the table, medical assistance, transportation assistance, money. So findhelp.org is definitely a place that you actually will want to go to see if they're able to help you, because all you do on that website is put in your zip code and it'll give you all the places in your state that are able to help you with different resources to help like I said, pay bills, get food on the table. You also have, here's the thing about it with PenFed, all right? I like PenFed. And the reason is because they make it easy for you to get a personal loan as well, because they have a DTI of above 60%, okay? So where most bank and credit unions are 55%, PenFed is 60%, all right? Now, and that's with no documentation that you can get qualified. They go up to $50,000 as well, all right? Now, you join them by submitting your application to open up a savings account. Now, one thing I would definitely tell you to help you get higher approval chances is to open up a checking account as well. All right. Especially if you're hovering around a 620, you definitely want to open up multiple accounts with them. All right. That's going to help you get qualified. All right. Now, let's talk about SoFi. A lot of people are like, well, what about SoFi? They offer up to $100,000. Here's the reason why I would not go for SoFi. All right. Granted, SoFi pulls Experian. All right. But the challenging part with SoFi is that when they report that loan on your personal credit, they report it as a CFA. It's a consumer finance account, okay, instead of an installment loan. And so what it does, whenever you trying to utilize your FICO 8 scoring, what it does, it throws it off by a couple points and stuff like that. All right. And it stays on when you pay it off, it stays on your credit file longer, but with your FICO 8 scoring, it's going to calculate it, okay? And it'll make it look like your FICO 8 score is struggling. So you have to be very careful with that SoFi loan, all right? Now, here's another platform, which is Viva Loans, okay? So with Viva Loans, they offer loans up to $15,000. Again, with Viva Loans being a platform, all right, I would definitely tell you, make sure your income, as a matter of fact, on our website, I put a link below, but on our website, we actually break down in terms of what your income should be for certain type of loans and stuff. So with Viva Loans, I would definitely tell you your income should be above $25,000. All right. The reason is annually. The reason is, again, by being a platform, they're not in all 50 states. They have different criterias and stuff like that. But at the same time, if you above that 50,000, that 25,000, I have it on the system is about 35,000 or whatever. But the higher the income on Viva Loans, the higher chance you will get approved. Now, let me tell you about Affirm. Now, with Affirm, granted, they go up to $20,000. But I just mentioned the same thing about SoFi. Affirm is going to report as a consumer finance account, okay? And so by reporting as a consumer finance account instead of an installment loan, again, when you're ready to use your FICO 8 scoring, it's going to lower your FICO 8 score. Okay, so just keep that in mind. All right. Now, another lender we're talking about is Universal Credit. Okay. Now, Universal Credit uses the Upstart platform. Now, here's the thing about it. They go up to $50,000. However, you have to have at least 2 trade lines on the credit file, and the credit file has to be at least 2 years old. Now, granted, they work with people with a 580 credit score. The thing about it is that if the credit file is not old enough, and again, here's where I'm going back, make sure, like with Universal Credit, the income should be above $45,000. All right. This is so important. And granted, like I said, these type of lenders, they're not going to do a hard pull on from the major credit bureaus. They're going to use the third party credit bureaus in order to qualify you. All right. Now, let's talk about one more, and that's Upgrade. Okay. And so with Upgrade goes up to $50,000 as well. 580 credit score, right? And a lot of people still have challenging time, again, because of the income. They're not putting on the application enough income. Granted, they said we work with a 580, but in order for that application to be approved, you have to have the income. Okay. You have to have the income. So that's the reason I tell you above 45,000, and making sure that your credit file is at least 2 years old. All right. Now, I hope that this video helps you. If you have any other questions about business credit funding, personal credit funding, removing negative items off of the credit, click the link in the description. Schedule one-on-one consultation. Thank you.